Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on SPY, IWM, and QQQ. The bulls buying the dip and remaining in control on SPY. Nice lower wick and close up near the high, and we broke resistance, the high of Friday. So all we've got is the high of today, 246.98, and then the all-time high, 247.42. That being said, we did have a bearish reaction to the earnings of Google, and this is going to be a little bit of a wake-up call to the tech sector. After the Netflix earnings, everybody was buying all of these tech names, continuing the run to the upside, anticipating that we would have bullish reaction to earnings. So now that one of the other big names has had a bearish reaction, everybody's going to get a little bit of a wake-up call, likely see some profit taking, and the tech sector and the overall market SPY here has been very strongly correlated over the past couple of weeks. So if we see the tech sector begin to consolidate due to this catalyst of Google earnings, then we will look for SPY to consolidate as well. Our first target, if we break 246.18, there's a gap to fill at 245.72. Those are our first two targets to be watching on a bearish reaction, but we'll have to see pre-market how it all shapes up. Weekly time frame still extremely strong after 2 bullish weeks. We could certainly consolidate and keep the bulls in full control, and we're on the verge of a bullish MACD cross. Nothing on the weekly time frame raises red flags, as we're right on the verge of the all-time high here. IWM, healthy consolidation as well. That looks like a little bull flag. Bulls buying the dip, closing at the high of the day. Resistance here is 142.82, 143.33, 143.52. Just looking at the highs of the past 3 days, those are the only resistances that we have as we are coming off of the all-time high, and our new higher low has just been established at 141.97, and we can be confident that that's the line where the bulls are going to be attempting to form this higher low because of the candlestick that has formed off of that level, with the bulls closing up near the high of the day and a very strong reaction off of that level. Weekly time frame still very strong. Exponential moving averages as support. Upper Bollinger Band has been resistance for almost 2 months at this point, but that's just fine for the bulls because it is ascending rapidly enough that the price is appreciating with it and maintaining control. On the verge of a bullish MACD cross here as well, looking for a bit more convincing cross. QQQ is going to be subject to the Google earnings being bearish. There was a very strong run-up in the tech sector in the final hour of trading, along with Google, along with QQQ, and here we are hitting new all-time highs after brief consolidation, but I do believe we will see a bit of a hit tomorrow due to this bearish reaction to Google. But watching Google, the bulls could very easily buy this dip, as it will still be forming a higher low on the daily and the weekly time frame. No trend is going to change on Google. We've been running for 3 weeks straight on Google, and there's a lot of cushion here. The Google chart looks exactly like this, so the move down on Google would be equivalent to QQQ pulling back to about 140 or so, where we stand right now on Google, and that's going to be just another higher low. So looking to see how much downside we see in the tech sector as a whole and in QQQ in relation to the Google earnings. But as of right now, support is going to be 143.35. There's a gap at 143.17, and then I'm looking down at 141.64 from there. Exponential support has been holding. We're due to consolidate, and we saw this extreme move to the upside, and the only thing that kept this move going was everybody seeing the Netflix earnings reaction and saying, oh man, I want to get in all the other names that have not had earnings yet, because if Netflix is going to be bullish in the tech sector, odds are that these other names are going to be bullish as well. So now that that's going to be no longer potentially the case, look for a little bit of profit taking in the sector. I appreciate you watching. Have a great night, and we'll see you tomorrow.